Oh, suppose you graduate from high school. Let's say you just slide by. All right, now you got to find a job. Now, what kind of salary do you expect for a regular person?
$250 a week.
$250 a week?
Yeah.
Sit down. I'm going to give you $300 a week. Yes, indeed. $300 a week, $1,200 a month. All right?
Great, I'll take it.
Yes, you will. And I will take $350 for taxes.
Whoa.
Huh? Yeah. Now, because, see, the government comes for the regular people first.
So that is every time I'm thinking about taxes, that's what comes to mind. The government comes for you first because and here's the way that it works. They require employers to withhold money out of your paycheck. It's that quickly and that simple. So yeah, whenever I hear that, I'm like, yeah, that's the employee quadrant right there. I think I got that one pretty good there. Rael, salute to you. Glad you're here. I think that kind of covers it. I think I missed anything obvious there, Mike? We didn't touch base beforehand.
Nothing that the average person would necessarily be looking at, right? I mean, that's your average employee. Those are the kind of standard things that you look at for deductions and things like that, So yeah, there might be some other smaller things out there, but they're more one-off situations, like you mentioned with the health, with the healthcare thing. So yeah, I think overall that covers it pretty well.
Okay, so let's go back to our model here of the ESBI. So the next part is, and whether people choose to move on to other squares or other quadrants, that's up to you. But let's look at the S quadrant. You own a job. You are self-employed. These are practitioners. I think of doctors, medical practices. I think of lawyers. I think of architects, insurance agents, investment advisors. These are people that are in professional occupations typically, or let's take a retail storefront. Someone who is the general manager. They are running the store. They are running the warehouse. If they are there, they own that job. They've got a job that needs to be done. The major difference between this area, the S quadrant, and the B quadrant, because the B quadrant is also being a business owner. The difference is the S practitioner or store, practitioner, franchise, whatever it is, can't run without the owner. At least not for an extended period of time. It is dependent on them. Either they are the primary source of the value of that enterprise, or they just have to make sure that things get done that need to be done. And if they're gone for a week, the whole place might as well shut down for a week. Imagine a dentist, and there's only one dentist in that office. Unless unless there's more dentists in that office or dental assistants can do the job, you can't do anything. So, it's highly dependent on you being there. Now, being in practice or being in business that way, you still get all the tax breaks available for a business owner. So the tax breaks between the B and the S, they're the same. They're just at a different level, different quadrants, different ways that they're applied. It's just a little bit different. But the way that the business functions cannot function without the business owner being there. I got an article on that some more, and I think that's pretty much it. But yeah, now self-employed, they can certainly have support staff. I highly hope that they do, because you can't do everything all the time. They might have some technology at work. Hopefully. Technology is far cheaper than hiring people. But otherwise, if they don't go to work, they don't earn anything. And even then, even if they go to work, there's no guarantee they will earn anything, right? We're in the insurance business. We know that it's possible that you could go work and try to cultivate relationships and such,